Hi, guys. We'll be kicking off in about 8 more minutes. So we got a few more minutes to go. Um, but if you have any questions in the meantime, please feel free to post them into the chat. Again, thank you to our early birds for logging in. Maybe if one of you wouldn't mind just confirming in the chat that you are reading my audio loud and clear. And of course, if you have any questions, feel free to post those into the Q&A, and we will be getting started in about 5 more minutes. Thank you very much, Echo. Appreciate that. About 4 more minutes, and then we'll kick off. Just as a little FYI for those of you who haven't joined us live on the webinar before in the past, we will be airing this live to Facebook as well for all those who weren't able to join into the live Zoom meeting. I do ask that if you have any questions, if you could please do your best to post them in the Q&A. I will be going through the Q&A first and doing my best to monitor that as I go through the webinar and answering questions as they come up. And at the end of the session, I'll do a quick double check on the chat just to make sure I haven't missed anything that flows through there. So preferred form of communication is the Q&A and then the chat. But of course, if any of you want to actually ask a question using audio, you can raise your hand and I will give you permission to share your audio and ask me a question directly. have me instead of our logo. Oh, I think I can make this a little bit bigger. There we go. Hopefully that doesn't cover anything on our screen. I think we should be good. Oh, moved it down. There we go. I can see a few more of you are logging in now. Thank you for joining us for today's session. Just as a bit of housekeeping, if you do have any questions as we go throughout the seminar, I will do my best to monitor the Q&A. So please post your questions in the Q&A. At the end of the session, I'll do a quick check on the chat just to make sure I haven't missed anything there. But please post in the Q&A as opposed to the chat. It's just a little easier for me to monitor and go through the questions one by one as they come up. So with that, I'm gonna get us live on Facebook so we can kick off here. Oh, okay. So I love that inception window. I think we are live now. So without further ado, I will kick off. My name is Andrew Wall. I'm the managing partner here at CPA4IT. As many of you know, we do regular webinars, usually 2 a month, to try and answer questions and provide the support that our clients need to organize their finances, create wealth, and transform wealth into a legacy. Today's session is going to be on personal taxes, what's new for the 2020 filing, and 7 questions that you need to ask before preparing and filing your personal tax return. So before I get into our agenda and what we're going to cover, I would like to take a minute just to tell those of you who are watching on Facebook Live, or those of you who are not familiar with our organization, a little bit about ourselves. So we are a 2nd-generation accounting firm founded originally by my father, George Wall, back in 1984 under the name Wall & Associates Professional Corporation. Together, my father and I have built this amazing firm that's got the best of both worlds. We've got traditional, experienced accounting firm with decades of experience with the most modern leading edge technology. And I think that's a great combination for our clients. As a result of that unique combination, we've been recognized as one of the top 50 cloud accountants in North America for the past 5 years in a row. We're also an elite QuickBooks Pro advisor, which means we get access to some amazing pricing on QBO. And we also offer amazing tools and technology like Receipt Bank. That's not the purpose of today's session, so I'll digress on that and just let you guys know that if you do have any questions about how we can help and any of the services that we provide, we do offer a free consultation, and you can book a free consultation on our website, cpa4it.com. refund.ca. So today's agenda, we're going to go through the sort of 7 key questions you need to ask yourself before preparing and filing your personal tax return for the 2020 calendar year. And whether that's you doing it yourself or having that prepared by us. So first and foremost, do you need to actually file a return? 2, when is your return due? 3, can you get any help preparing your tax return, either for free or paid? How should you prepare your tax return? And of course, when will you get your notice of assessment? That's a big one for anyone who's looking to get financing for this incredible housing market that's going on right now. And another really important question, when will you get your refund, or when do you have to pay your taxes if you do owe? And then lastly, we're going to touch on what's new for 2020 and some of the things you might want to be aware of that are brand new to the 2020 filing that will help you maximize your deductions. As a bit of housekeeping, I do want to remind everyone that I will do my best to answer questions as they come along. If you're watching live on Facebook, my colleagues will be transcribing those messages or those comments into our Q&A here. So you can just type those in. There might be a bit of a delay, but we will do our best to answer those questions. If you're following along live on the webinar, then please use the Q&A feature. I will check the chat, but I will wait till the end of the presentation before I check the chat. I will be checking the Q&A as we go through live. Of course, if any of you want to raise your hand and ask me a question verbally, please use the raise your hand button and I will do my best to come to that. So without further ado, let me kick off by talking about whether you actually need to file a tax return. The short answer is pretty much yes, you do. What we have here is we have got a slide deck with a bunch of hyperlinks in it. If anyone would like to receive a copy of that, please message customer service at cpa4it.ca and request a copy, and we'll be happy to share that with you. But the short answer is yes, pretty much everybody needs to file a personal tax return. The only exception to that is if you are a dependent and not earning any income. So if you are earning any income whatsoever, even if it's below the basic income threshold, you will need to file a personal tax return. And in fact, if you are an employee, many of you will actually be getting a refund, and it's in your best interest to file a tax return. Like I said, even if your income was exempt or you had no income or income that was below the minimum taxable amount of about $11,000, you do need to file it. And as I said, there are some benefits like the Canada Child Benefit, the GST, HST tax credit, the working income tax benefit, the guaranteed income supplement, and the climate action incentive, which could result in refunds that you may not realize you're eligible to get. So you want to make sure to submit that return and get your refunds as soon as you possibly can. So the next question is, when do you need to file your tax return? As of today, we have no extensions on the personal tax filing for the 2020 calendar year. This is a bit disappointing. I have personally signed a petition to request an extension. I encourage you, if you follow me on Facebook, you'll see a copy of that petition originally started by my friend Timothy Deniers. I encourage everyone to fill that in and request the extension. But as of today, the deadline is not extending, which means that we have till April 30th to file and pay your taxes for the majority of people. If you are a self-employed individual or the spouse or common law partner of a self-employed individual, you will have until June 15th to file your return. However, the payment deadline is still going to be April 30th. So you need to know and have calculated how much you owe prior to April 30th, because you will have interest that begins to accrue as of April 30th. There's no late filing penalty until June 15th, but as I mentioned, there is interest. There is one exception, I guess, if you're a deceased person, if you do need to file a tax return for someone who has died, the due date for the return will depend on the date of death and whether the person owned a business, which gets a little bit more complicated. If you are in that scenario, please reach out to one of my colleagues or myself, and we'll be we'll do our best to make sure that we help you understand what your filing deadlines are. Can you get any help preparing your tax return? Yes, you can. So in addition to hiring a CPA firm such as ourselves, there is support that's available through CRA and their community volunteer income tax program for low income individuals. So you can again check out the link on this PowerPoint deck to find out more information about the volunteer income tax program. But you might be able to get your income tax return completed for free through this service. And they'll have more information on the CRA website about that. But there is a low income threshold that you must meet in order to qualify for that. So now we get into how do you actually prepare the information for your tax return. So step one is to collect all your information in the supporting documents that show your income and that support any deductions and credits that you will plan to claim. So now that we are in a virtual world, thanks to COVID-19, we are encouraging everyone to provide us preferably PDFs of all these supporting documentation. You can drop off documents at our office. However, our office is only open 1 day a week. So you would need to make arrangements with my colleague, Maiko Ito, who can let you know what times and what days she will be in the office. It's typically Wednesdays 9 to 5. But make sure that you're aware of that as opposed to just running down to our office and leaving confidential information in the mailbox, which is definitely not secure. So once you've organized that information and you've got it ready, you want to select either the software or the service that you're going to use to complete your return. Of course, if you're filing with us, we'll take care of all the software. You don't need to worry about that. But we will provide you tools to help you organize that information. We have a checklist that you can download that tells you all the information that you're going to need. We've got some tools like our sole proprietor worksheet and our rental income worksheet to make the collection of this information a little bit easier and a little bit simpler for you to prepare and send over to our team. There are lots of great tools out there like TurboTax, TaxFile, that are great if you've got a really simple tax return. And I do encourage people, if you've got just a simple T4, to go ahead and leverage these tools and technologies because they can save you a couple bucks. And there's not a ton of value that an accounting firm can add on a personal tax return where it's just a straight T4. Now, if you have investments, if you have self-employed income, if you have rental income, if you have something else going on in your tax return, you definitely want to seek the advice of a professional who can help you optimize that. But if you're going with a straight T4, I highly recommend using those free tools or those paid tools that are out there. So once you've chosen your appropriate tool or software, you're going to need to make sure that your personal tax information is up to date. For us, that means completing the personal tax checklist and submitting that to us. You want to make sure that you're reporting all your income. This is the number one thing CRA is looking for. They do not like it when people do not report income for what is obvious reasons. So the big thing is that you now have a feature called Autofill My Return that will make sure you can download any of the returns that have been filed with CRA. So you'll get anything for your T4s, as well as any government subsidy programs that you've received. Most of that information will be available on your CRA website. It's important to make sure you cross-check that against the physical T4s, because sometimes when there are amendments or there are changes, CRA may not have the most up-to-date information on their portal. Unfortunately, we have seen time and time again where that direct data download or autofill my return feature is not 100% accurate. So it's important to make sure that you cross-check and validate that information. You, of course, want to make sure you find out what deductions and tax credits and benefits that you can claim. We've mentioned a few earlier. There's a number that we'll go through when we talk about the new changes that you want to make sure that you're aware of. So make sure that you know and understand what those tax credits are and what forms, if any, that you'll need to complete in order to make sure that you're getting those tax benefits. Then when you're satisfied that you've got your income reported and you've got all your tax credits prepared and all the appropriate forms completed, you'll send that return to the CRA. That will be done by e-file. If you are trying to paper file, there is an extra charge to paper file. So you want to make sure that you're using a tool and technology that will have e-file capabilities. All the ones I mentioned will have that. And of course, we will be filing everyone's electronically unless there is an express reason that we cannot e-file your return. Lastly, you do need to keep your supporting documentation. So keep all that information well organized. Again, if we are preparing the return for you, we will keep a working paper file with all the supporting documentation that we need to be able to defend your information and go through an audit if it were to ever happen. But if you are preparing your own tax return, you need to keep that for 6 years from the notice of assessment. Now, an important thing about document retention is if you have any documents that affect a period that's, say, 6 years ago from your notice of assessment, but were for a period earlier than that, you can take capital cost allowance. If you are a self-employed individual, you might have some assets that you bought prior to the 6-year period, but we're still, amortized in that 6-year period. You have to keep the documentation for all of that going back well beyond 6 years potentially. We do have a whole nother session on document retention and why it's important to keep that information. But I will digress on that and tell you a little bit more about when you will get your notice of assessment. So one of the great things that was rolled out last year is the use of the Express NOA. So this allows you to get your NOA right after filing. So we can get a copy of your Express NOA for you. So if anyone is going through the process of arranging financing for any reason, and you need a copy of your NOA as soon as possible for that financing, we can get that for you a lot quicker than we would traditionally, because normally your NOA is going to be mailed to you, and the electronic version will be up on your website, in the CRA website, typically in 1 to 2 weeks, but the physical document won't be out to you until 6 to 8 weeks. So now we have the ability, if you do need it, to retrieve that immediately after e-file. So if you do need that for any reason, please let us know and we can get access to that pretty much immediately. If those of you who haven't set up your My Account or your My CRA mobile app, I do strongly encourage you to set up these tools. They're great resources for you. It allows you to get access to information much faster, be able to update information like changes of address, be able to file adjustments, anything like that, as well as grant access to us. It makes your life a heck of a lot easier. So you can just Google my CRA account and My CRA mobile to get the mobile web apps, which will keep you alerted to all the deadlines, all the changes, all that information stuff, which is great to have. So we're getting near the end here, but a big question a lot of people want to know is, when will you actually get your refund? Or when do you have to pay any balances that are outstanding? So first of all, your refunds are typically, they say 8 to 14 days. It's usually a little bit longer than that, but that is their stated turnaround time if a return has been e-filed. If you're paper filing, it could take a little bit longer. This is also dependent on direct deposit. If you're not on direct deposit, that turnaround time could be as much as 6 to 8 weeks, again, to get that physical check. So it might be mailed to you in 8 to 14 days, but could be longer for you to receive that. Now, we mentioned the filing deadlines earlier, and those directly correlate to your payment deadlines. So as I mentioned, if you are self-employed, you do get that extension till June 15th for the filing. However, the payments and the balance owing are still due before April 30th. There are different payment options that are available from CRA if for whatever reason that you cannot make the full payment. So you can reach out, talk to CRA. I do always encourage people to talk to CRA so they don't put you through their collections process, and work out a payment plan with them to do that. Again, if you are in the low income thresholds, there are some special exemptions on the interest for anyone who's been impacted by COVID. But there are special rules for that, and it is only um, and you're only going to get some benefits related to the interest. You're still going to owe on any late filing penalties. So make sure you get everything filed and talk to CRA about what your options are if for whatever reason you cannot make the full balance payment by April 30th. Now we get into what's new for 2020. And this is probably the big reason a lot of you wanted to join us in today's session. So one of the first things is, and if you're a client of ours, you know we sent out a whole bunch of information around these new box numbers on the T4. This relates to how you prepare your T4. It should make the actual filing of your personal tax return still fundamentally the same and still pretty straightforward for those of you who are a simple T4. There were new boxes put in place to help CRA understand when that income was earned. You will need to report the appropriate boxes in the appropriate software that you're using. But it is, again, the straightforward process of take what's in box 58 and put it what's in box 58 of your tax return software. So from a preparation of your personal tax return, it's not really a big change or a big complication for you. But there are 4 new boxes, which is box 57, 58, 59, and 60. And those will be on the bottom of your T4 slip. So I'm just going to run through. I've got some notes here, so bear with me as I double check my notes here, because there have been a number of changes which mostly relate to you paying less tax, which is a great thing. The other thing that's going to be new is for those of you that did receive the Canada Emergency Response Benefit or any provincial or territorial payments. These amounts obviously are taxable, or maybe not obviously, but they are taxable. And no amount of taxes were taken off at source. So you do need to be prepared for the fact that you are going to owe for any of those benefits that you received. Now you will get a document from CRA, which will either be a T4A or a T4E. Again, these are pretty straightforward documents that if you have not received them for whatever reason, they should be available on your CRA, my CRA account. And pretty straightforward instructions on how to complete and prepare those. Sorry, let me just stop that. My phone is ringing. So that's obviously one of the big changes, as well as if you've got wage subsidy and you are self-employed, you will need to report these amounts as business income as well. So if you're sole proprietor and you are receiving the wage benefit, this is really something important to work with on an accountant. I would strongly encourage you not to file that on your own unless you absolutely know exactly what you're doing for that. There are, if you, another note here is that if you received a slip showing taxable income, even if you receive these, even though your income is exempt under the Indian Act, you do need to complete a Form T90, the income exempt from tax under the Indian Act. So that's important to be aware of. And then there's just a little note here. If you received it and you shouldn't have, you may need to repay it. I think that's sort of standard stuff to be aware of. Now let's get into these individual line items. So there's the home buyer's plan. If you are not considered a first-time home buyer for the purchase of a home buyer plan, and you have experienced a breakdown in your marriage or common law partnership, you may be able to participate in the home buyer's plan under certain conditions. For more information on that, again, there's lots of information on the CRA's website. So if you're one of the unfortunate few who went through a marriage crisis during this COVID thing, and you had not made use of the home buyer's plan, which for those of you who are not familiar with the home buyer's plan, this is the ability to draw money out of your RRSP without having to take it into income in that year. and to pay it back over a longer period of time, like 15 years. And that amount is up to $35,000, which is really important and really helpful if you are needing to purchase a house. Now, with the basic personal amount, which is line 30,000 of the return, this amount has increased for pretty much all taxpayers. The same with line 30,300, which is the spouse or common law partner amount. This is also increased, as is line 30,400, which is the amount for an eligible dependent. So this is pretty much increased across the board. This is something that if you are using a tax return software, it's going to calculate all of this for you automatically, unless you're doing some sort of old school, paper filing, which would actually cost you extra. I can't see why you would do that. You don't need to worry about the amounts, but you can get them on the CRA website if you ever needed them. The other thing that's new this year is the digital news subscription. And this is going to be line 31,350 of the return. And this is from 2020 through 2024 tax years. And you may be able to claim a non-refundable tax credit for any of the expenses that you paid during the year for a digital news subscription for a qualified Canadian journalism organization. So it has to be a Canadian journalism organization, and it does have to be online, but you may be able to deduct that on your personal return. As well, there are some updates for the tuition, education, and textbook amounts, which is going to be line 3230 of the return. And this is going to be mainly related to the new Canadian training credit that students can claim for the year. And the thing is that the amount that they can use to that the amount that they get on their on this credit will affect the calculation for their tuition tax credit, and any transfers, if it's being transferred to a parent or a designated individual, or even carry forwards. So just be aware that that may be lowered by the new Canadian training credit, which we'll cover a little bit more detail down below. Donations and gifts, which is line 34,900 of the return. They've simplified the calculation on Schedule 9 for most individuals. And also, this will affect 2020 and all later years. You may be able to claim non-refundable tax credits for donations made to registered journalism organizations. So there's definitely a big push to support Canadian media. That is in here. But it should make filing donations pretty straightforward, which is, to be honest, has never been that hard anyways. We also have some changes. Like I said, there's the new Canada training credit, which is now going to be line 45,350 of the return. So if you meet certain conditions, you'll be able to claim a Canada training credit, which is a new refundable tax credits that's available in 2020. But if you do that, it will reduce and affect your tuition, education, and textbook amount. So just be aware of that. We also have the Canadian journalism labor tax credit, which is actually new of 2019. It's not really new this year. But if you are a membership or of a partnership that is a qualifying journalism organization, you can claim the new refundable tax credit allocated by your partnership. There is also a mineral exploration tax credit for flow-through share investors. Basically, this investment tax credit has been extended for an additional 5 years through to March 31st, 2024, for any of you who are doing flow-through share investment opportunities. Other employment expenses, this is probably the big one that has seen the biggest news out there. And this is line 22,900 of the return. So if you worked from home in 2020 due to COVID-19, you may be able to claim certain employment-related expenses. And we're going to talk a little bit more about that in detail, because that's the big thing that most people are aware of. And the first thing to be aware of is that there are a couple of different ways of claiming additional employment expenses. There's a T2200, a T2200S, and then the simplified method, which is, I apologize, bear with me, I will come back to that in a second. I just noticed a couple of questions that have come through. How much medical expenses can be claimed? There's no limit to the amount. However, for a medical deduction, a medical expense to be deductible inside the corporation, it must be at least 3% of your income. Anything below 3% isn't, you can put it in, but it's not going to reduce the amount of taxes that you pay. So once it exceeds 3%, it starts to wind down and minimize the amount of taxes that you will pay. There's not a limit to the amount that I'm aware of off the top of my head. However, it does need to meet all the criteria about what is a qualifying medical expense. I have $10,000 in tuition credits. Can I use all of that to reduce my taxes? Assuming that you have, if you have that in income to apply it against, you can. If not, you can carry it forward, or you can also transfer it to another qualified individual. But assuming you've got those tax credits, those tuition tax credits, then by default, they're actually going to be applied against any income that you have. If you don't have enough income to apply those against, they will carry forward. So what is the basic personal amount? There's a basic exemption amount below which there's no tax. There's an amount both federally and provincially. It's in and around the $11,000 range. So if you have income below that threshold, there's no taxes on that income. There could be CPP, there could be EI, there could be other things, but no actual federal or provincial tax. I don't know what, so there's another question, are they all refundable? I would say no, some are refundable, some are non-refundable tax credits. Depends on what type of tax credits you're talking about. And so I think that gets us through the, I'm going to jump back over here. I'll circle back to any more questions if we get them, to talking about, sorry, what did I do here? Come on, go back. About the new T2200 and the expenses that you can deduct against employment income. So as we mentioned, there is the traditional T2200. It's not new. It's been around for a while. And this does require that your employer complete a T2200 form. And they'll tick off a bunch of boxes and indicate whether they've reimbursed you for any of these expenses. If you're a commission sales employee, there are some restrictions. It's limited to commission sales. If you're not a commission sales employee, it's basically limited by the tick boxes that your employer has completed. There is also a T2200S, which is a simplified T2200, specifically brought out for COVID. And it's going to allow you to deduct your home office expenses, as well as a few others. And then we'll talk a minute about what the new rules are, about what you can and what you cannot claim. And then there is also the simplified method, which basically gives you $2 for every day that you worked from home. In order to qualify for that, you will need to have worked from home at least 50% or more. And I think it was a minimum of, Rachel, can you remind me on that? I think it was 4 weeks. Let me double check that. Give me 1 second. And I will double check that. Because I got it wrong last time. So I want to make sure I get it right this time. So almost there. It is 4 consecutive weeks. I had it right. I just wanted to double check myself. So 4 consecutive weeks. Now I do see a couple questions coming up. I'm just going to finish with this section and then I'll circle back over to those Q&As. So bear with me 1 second. I'm just going to finish up on this because I think it's really important to know and understand what you can and what you cannot deduct as far as the new home office expenses. So what can be claimed? Let's start there. So electricity, heat, water, the utilities portion, electricity, heat, and water of your condo fees, your home internet access fees. You can't deduct the router. There are some things there that you do need to be aware of. Sorry, I'm just trying to get back. I do have some notes on this as well, if I can just find my notes. And I didn't save it. So it does not include your router. There's a couple exceptions to the home internet access fees you have to be aware of. You can claim some maintenance and minor repair costs, as well as rent paid for a house or apartment where you live. However, what's not included here is mortgage interest, principal mortgage payments, the home internet connection fees, there it is, your furniture, any capital expenses, replacing windows, floorings, furniture, wall decorations, those types of things. If you are a commission employee, you can also deduct your home insurance, your property taxes, the lease of a cell phone, computer, laptop, tablet, fax, et cetera, et cetera. But those are only available for those commission sales employees. Now, when using the long method as opposed to the flat rate method of $2 for each day, there is a specific calculation you need to go through, and there is a form on CRA's website to help you complete that form. And I'll pull that over here so people can see. Now, whether you should use the flat rate method of $2 a day or the T2200S or a traditional T2200 will really depend on your individual situation. There is no yes or no to this because my colleague and I ran through a couple of different calculations to look at whether it was better to use the T2200 versus the simplified method versus the flat rate method. And what I can tell you is in a situation where you own your own home and you're not going to be able to claim mortgage interest and stuff like that, the flat rate method often comes up being better. But if you do rent an apartment, there's a probability, high probability that using the calculation is going to be better for you. But again, that depends on whether you have a dedicated space. So as you go through this process, you'll see, okay, what method am I going to use? Am I going to use the flat rate method? Am I going to use the home office expenses paid while working? Am I going to use the home office expenses or other employment expenses? So as I complete this and choose one option, I'll get more options about whether I rent or own. Let's say I own. Did you earn commission income? Yes or no? Let's say I said no here. Do I have a designated workspace from home or common shared space? If you have a common shared space, this is going to dramatically reduce the deduction. Having a designated deduction is going to give you a more traditional calculation where it's the square feet of the home office over the total square feet to figure out what the percentage of the actual expenses are. And then it's going to multiply that by your individual expenses. So that gives you your calculated space. And then you're also going to potentially have an adjustment for the amount of time that you worked from there. And then you put in your individual numbers and it will give you out your calculations. And so Rachel was just replying to me and saying, yes, weeks. Let me just thank her. So thank you. And then I do see, yeah, thank you, Rachel. And then there was another question from my original question, which was, he was talking about tuition tax credits. Tuition tax credits are non-refundable. So I hope that answers your question. So they're basically going to reduce the amount of taxes that you pay, not trigger a refund, but they will carry forward to other years. And I think that's it for the Q&A. And let me just make sure I haven't missed anything. Go back one slide. Just double check my notes, make sure I haven't missed anything here. So temporary flat rate method, which was announced in the fall economic statement, will allow employees to claim a deduction of $2 for each day they work from home, up to a maximum of $400, which we've talked about. Under this method, you do not need to get the Form T2200 or the Form T2200S from your employer. If you are not using the flat rate method and you want to claim this home office, you do need either a T2200 or a T2200S. It does also, the new method eliminates the need for employees to determine the actual workspace percentage of use, as well as like calculating all your individual expenses. Under the detailed method, the eligible employees working from home or employees who are otherwise required to work from home can claim the amount paid for eligible expenses supported by documents. For employees to choose to file under this method, the CRA has the simplified version, the T2200S, as well as the T2200. The form you will actually complete on your tax return is not actually a T2200. You receive a T2200S from your employer, which allows you to complete the T777S statement of employment expenses for working at home during COVID. And they have, lucky us, they've expanded their list to include home internet access fees, which is, that should have been given in a home office, right? I do see that there's no other Q&A coming up right now. I do see a little bit in the chat, so I'm going to just double check our chat, see if I have missed anything. Oh, okay. Rachel has given the basic amount. So federally, it's up to $13,229 right now and $13,229 in Ontario. And that's it. So I'm going to, like I said, leave it open for a few more minutes in case anyone has any questions that they haven't asked. But other than that, we'll wrap it up a little bit early. And I'll thank everyone for coming out and joining us. Do have another question that seems to have come through here. Does the CPP be deducted from, is the CPP deduction reimbursed back? I hope I'm following this. No, your CPP is a payment into Canada Pension Plan, unless there has been an over withholding, which does sometimes happen when you have multiple employers. So there is some circumstance where you'd get some of the CPP back, but normally not. Your CPP is Canada Pension Plan. It goes into your pension, and you will ostensibly receive a direct correlation benefit in retirement. Well, thank you again, everyone, for joining us on this session. Remember that deadline has not changed. If you do want us to prepare your tax returns, Rachel, maybe you can, I think we have a hard stop deadline at which we can no longer guarantee that we complete the return. I'm not sure if it, so if you have self-employed income and it wasn't deducted at source, it will be part of what you owe at the end of your filing. So I think you meant what won't be deducted will you owe for it. Can I claim this if so question coming through from our Facebook channel. Can I claim this if I am a dividend only taking business owner? So I'm assuming we're talking about the home office expenses. And I'm also going to assume that you are claiming the home office expenses inside your corporation. You can't double dip. You can't claim a home office inside your corporation and then claim, home office employment expenses, number one. And number two, if you're a dividend, you're not actually an employee. You're receiving that compensation in the form of a shareholder. So no, no, and no. Awesome. I think that's it. Rachel, maybe you can just, if you can, update me on that hard stop deadline. But it's pretty soon because we only got a couple weeks left. We're just over 2 weeks before the deadline. April 16th is our hard stop deadline. So you've got 4 days to get your information into us. Otherwise, we cannot guarantee you will be completed on time unless the CRA extends their deadline. I know that for whatever reason, this year it seems like a lot of you have put off filing and preparing your personal tax returns. We are, a fraction of the number of personal tax returns we normally complete by this time of year, which means that if you all bring us in at the last day of April 30th, we will not be able to complete your tax return on time for you. So just a heads up on that. And again, we got one. Oh no, that's Rachel just. We got one more question that's so yes, if your employer is offering you a T2200S, they should have provided that to you along with your T4. That is something that your employer would provide. But you do not need the T2200S if you are using the flat rate method. And so they're not obligated to provide you the T22S. But if they are, that gives you some more flexibility. Awesome. Well, I think we'll leave it there. I'll give everyone back an extra 16 minutes of their schedule. And thank you for joining us today. And have a great Tuesday. Bye for now, everybody.